Hello.
Hi, Sophia.
Hi. Can
How
you
are
hear
you?
me?
Yes, I can. Can you hear me?
Good.
Okay, so we have a couple of minutes before we start this webinar. How's everything?
Good. And yourself?
I'm doing very well. Glad to see you again.
Yeah, likewise. Getting ready for the ESR?
Oh, I think we are, and our clients, they will be after this webinar.
Yeah, I'm sure. Because it's quite an important topic now.
It is indeed a very big topic. Clients, they speak about it every single day. We're receiving calls every single day. It's one of the reasons why actually we decided to do it as soon as possible, and in order to give them the input, the assistance that they need, and to help them to put everything properly and to be able to follow, above all the regulations.
Yeah, indeed. Especially when I have seen, the fines that some of the free zone are applying. Like, for instance, I get to know about the DIC.
Mhm.
They're going to apply $25,000 if you don't file a notification. It's quite
That, uh,
quite serious
that's
topic.
going to encourage everybody to follow in a very
Yeah,
well manner.
exactly. But we are here to help.
That's correct. That's correct. That's the reason we're here. Um, okay, so we have, I think, just 1-2 minutes before we start the webinar. I'll wait
Mhm.
until a bit more attendees get connected. As of now, we have about 85 attendees with us, and they keep connecting. So let's give them maybe these two more minutes joining us. Okay. Okay, so okay, Sophia, I think we're going to start. Now we have 100 attendees. If you're ready.
No, sure, completely ready.
Okay. So good afternoon, everyone, and good afternoon, Sophia, again. I would
Good
like to
afternoon.
welcome all of you to, thank you. I'd like to welcome everybody to this webinar hosted by SFM and Mazars. Today, we will be talking about a very important subject, the economic substance regulation that has been introduced in the UAE recently. Sophia, I would like to tell you thank you very much for being with us today and to give us this time to go through this webinar and to discuss everything and to give all the relevant information to our clients. Now, as we go, I'm just to let you know, we're having now about 125 attendees already. These attendees are existing clients from both firms, and as well as prospects or maybe a new clients, or even people would like to learn and get to know more about this subject. So just to give you a quick brief and a background of who we are. SFM is a corporate service provider. So we are established in 4 different jurisdictions, Geneva, Dubai, Hong Kong, and Seychelles. We are operating in about 25 jurisdictions, assisting and providing company formation services and administration and other services related to the company structure itself. We have as well with us today with our collaboration, we have Mazars. Mazars is providing legal and tax services, and from Mazars we have today Sophia with us. So Sophia, to give you just a quick brief and background, Sophia is the head of tax for Mazars UAE. She has over 15 years international tax experience advising and assisting companies from public corporations to family-owned entities, all gained both in Luxembourg and Dubai, all through the Big Four practice and major law firms. She has a very vast experience coordinating regional tax advice, international companies investing in GCC, Africa regions, and as well as she's experienced in international tax structuring, tax merger and acquisitions, investment funds, real estate structuring, VAT. Correct me, and maybe you can add more to your portfolio, Sophia. Okay, so this is the background for Sophia, and thank you very much again to go through this. Now, for all our attendees, I would like, now we have 170 attendees already. So I would like to inform you and that you will not be able, unfortunately, to interact with us in a live manner because it will be too much to handle during this. But however, you have the Q&A and you can easily leave your comments, your question, and we will be more than happy to assist you. And as we go through this presentation, we will definitely answer your questions. We do our best to answer as many as we can. Shall we start, Sophia?
Yeah, sure. Thank you. First of all, thank you to SFM for giving me the opportunity to do this presentation. Definitely, I think it's important that we all work together from a tax advisory point of view, but also from an implementation point of view, to work closely with corporate service provider like yours, in order, of course, to implement what we advise as a tax advisor. Correct. So now I'm going to try to share the presentation, and unfortunately, I see that I have a little issue. So apologize about that. Trying to fix that with the IT. So I'm working on it, huh?
Oh, take your time. I think we have time today.
No, I'm trying to share and it's all disabled.
Try now, Sophia. I think you can share it.
Yeah.
Go ahead.
Now I can work. So it's fine. I think you can see the slides,
yes,
correct?
I believe we can. Yes, go ahead.
So as I say, as I always mentioned earlier, so I'm going to do a presentation about the practical implication of the economic substance. So during this presentation, I will give you first a little bit of background of the reason why this ESR has been implemented in the low tax and zero tax jurisdiction. Obviously, I will cover also the scope of this economic substance regulation. Then I will briefly talk about what type of entity can exempt from this ESR. And I will talk about economic substance requirement applicable to relevant entities carrying out these relevant activities. And then I will go into a bit more details on this relevant activity and the practical implication for UAE companies. And of course, the declaration and reporting obligation applicable in the UAE. And the sanction, of course, the sanction if you don't comply. And we will finish together with our approach in terms of ESR review, and we will finish with quite a flowchart summary that will summarize basically the presentation and what are the steps that needs to be taken by businesses in order to meet this ESR.
Perfect. Sounds very well. Sounds good. Go ahead. Let's start.
Talking about the background, so this ESR regulation has been implemented in 9 low and 0% tax jurisdictions in order to meet the EU and the OECD standards. So this ESR has been implemented in Bahamas, Bahrain, Bermuda, BVI, Cayman Islands, Guernsey, Isle of Man, Jersey, Mauritius, Seychelles, and of course the UAE. So broadly, the objective of this regulation is to prevent such low tax jurisdiction from attracting profits from certain mobile activities. And this is the most important part, without corresponding economic activity. So regarding the UAE specifically, the ESR has been introduced back in April 2019 through the Cabinet of Ministers resolution and also through the ministerial decision of September 2019. So this regulation is applicable as from the financial year starting 1st of January 2019.
Okay.
Talking about the scope of the economic substance regulation, in the UAE, as subject to the ESR, any licensee defined as a natural or juridical person licensed by the relevant UAE licensing authority, which include any entity located in a mainland or any free trade zone, and also registered an offshore entity. Regarding the other low tax jurisdiction, it's generally applicable to any locally incorporated companies, foreign companies registered in this relevant jurisdiction, and also limited partnerships with legal personality.
Okay.
So regarding the relevant activities, so basically, as I said, any licenses, what I defined previously, which carries out any relevant activity that you can see in these slides and derives income in the UAE will be subject to the ESR. The same rules apply in the other low tax jurisdiction. So I put in different color the IP and the holding business, because basically for the holding, you have quite a light substance requirement, and the high risk IP, they will have quite high level of substance. I will go into detail at a later stage. So in order to determine whether you undertake this relevant activity, you are expected to use what they call a substance over firm approach, which requires the business not only to consider the activity that are stated in the commercial license or registration certificate or bylaws, but also assess the real activities which are carried out during the financial period. So it's very important to remember that. Regarding the company which are exempt from the ESR.
So, sorry to cut you, Sophia. Just to be able to go back on the previous point, we have already 229 attendees. They're with us now, and I start to receive comments and questions. Just to repeat to all of them, please don't hesitate to leave your question in our Q&A, and we will answer to them. So I see one of the questions I'm reading now. It states, if I do not carry out a relevant activity, just what you described to us earlier, it says, do I still need to file an ESR notification?
So normally you should file. You need to check depending on your regulatory authority, what are the requirements in order to make sure that you don't need to file this ESR. But in principle, you should file it indeed. So I go. Any other question related to the scope?
I think it's fine. No, so far it's okay. Go ahead.
So regarding the exempt entities, so certain entities are exempt from the ESR. So those entities are those who are who have majority direct or indirect government, state or federal ownership. So this one is not subject to the ESR, and those who are even carrying out a relevant activity and they do not derive income are also exempt, even though that they still need to file a notification. Regarding the other law, the jurisdiction, I give you examples like Bermuda, BVI, or Cayman Islands. Entities may be able to claim an exemption on the basis that they are tax resident in another jurisdiction. I have seen in the past, back when I was working in Luxembourg, you had some company which were registered in BVI and they were effectively managed in the Luxembourg, for instance. For those entities, if they can prove that they are tax resident in Luxembourg, even if they are registered in Bermuda or BVI, they will be, they can apply for an exemption in the respective jurisdiction.
Okay, very well.
Regarding the economic substance requirements, so all companies who are subject to the ESR will have to meet 3 tests: the direct and managed test, the Cbi test, which called core income generated activity test and the adequacy test. Few comments regarding the direct and managed test. So in terms of this first condition, entities will have to be directed and managed in the UAE. So it is also applicable to all the low tax jurisdictions, the same condition. So it's just important to note that it is the relevant activity that must be directed and managed in the UAE. This is an important point. It's not a question about if the legal entity is managed or in the UAE, basically. It's really the relevant activity. So also all the strategic decision must be taken by the board in the UAE. So also you need to have an adequate number of board meetings. The UAE law states at least one per financial year need to be held in the UAE. Also, the number of board meetings will depend on the nature of the relevant activity and its importance in the overall business of the legal entity. So it will be determined on the case-by-case basis, depending on your activity and what it needs to carry out this activity. In that respect, regarding the board meeting, we recommend to have a quorum of directors physically present in the UAE. So these directors attending such meeting must have adequate knowledge and expertise to direct the relevant activity. So you need to be ready to prove that with CVs or any documentation that can justify this adequacy of knowledge, I would say. And the decision of the board must be minuted, signed by the entities, and those minutes must be kept in the UAE. It's exactly the same rules applicable in all the low tax jurisdiction. You just need to replace UAE by the BVI or Cayman Island. Regarding the SIGA test, so core income generating activity, this SIGA needs to be carried out in the UAE. So in the law, each relevant activity has specific SIGAs that need to be carried out in the relevant country. Regarding the adequacy test, so entities need to have adequate expenditure, number of suitable qualified employees, and appropriate premises in the UAE. So in terms of the level of employee expenditure and premises, so this will depend on the size of the business and the needs to carry out the relevant activity. Again, it will be determined on the case-by-case basis.
Okay, so we don't have a specific number of employees that they would need basically to hire and to put in place. It depends really on the activity and what we would have to check on case-by-case basis.
Exactly. Okay. So only the expenditure incurred in the operation of the relevant activity will have to be taken account. So you need to ensure that the employees with the technical qualification actually manage and transact the relevant activity are in the UAE and not from outside. And also the UAE entity needs to have appropriate premises. So this office or premises will be either owned or leased by the UAE entity. So in terms of to meet this requirement, you can also use outsourcing. So, but if you outsource some of the SIGAs to a third party, you need to know that no part of the entity's SIGA can be outsourced outside the UAE. So the service provider must have all-time level of employees and expenditures and premises in the UAE. And you need to prove, to demonstrate your ability at all times to supervise the third party. So after understanding the scope of the ESR and the substance requirements which are applicable to the relevant entity, I will now cover certain type of activities in more details and see the practical implication for UAE businesses who carry out such activities. Okay. Now, noting that all these rules are also applicable to other low tax jurisdictions like BVI or Mauritius as well. Can I go to the, sorry.
Okay, so basically, now we have basically, if I remember correctly, 9 specific activities that are subject to this regulation, and these activities, which is this is what you're going to show us now, and we're going to try through these activities to give more examples to our attendees. We have now 243 attendees as we speak, and I'll try to assist those attendees in some of their questions, and we try to answer them as we go. Let's start with the first activity, which I see it's a holding company.
Yep. So regarding the holding company business, so it is defined by the law as the business of being a pure equity holding entity. So it is qualified as a holding company, any entity that only holds participation in other entities and only earn dividends and capital gains. So what it qualifies as equity participation should include any shares in a company or any form of investment in an equity that will give the investor the right to participate in the profit of the entity.
Okay.
So in the case where the ownership of you own any other form of investment, such as interest-bearing bond, for instance, for example, you should take the entity outside of the scope of the holding business activity, but it may fall in the scope of another relevant entity. So if you don't stick to the strict definition of the holding, it doesn't mean that you need to pay attention to make sure that you are not falling under the scope of another activity, which will be subject to the ESR.
Okay, well, this is very interesting information, actually, because as you're saying, I'm reading a question that would be quite relevant to what you just described to us. Let me share the question to you. I have someone who's saying, I hold an offshore company in Jebel Ali. This company is holding a property, which is rented out in Dubai, and it as well holds shares in other structures in the UAE, and it holds as well other structures internationally. Is this considered to be a relevant activity? So the question here is, this is a holding company. It is holding a property, so it is not only acting as a holding, it holds shares as well, and then and these shares are in a company in the UAE and in a company outside the UAE as well. So what do you think about that? What would be the answer to this question?
Sorry, because we had like some technical issue. Can you repeat again the question?
Okay, I'll come back to you. So the question is saying, I hold an offshore company in Jebel Ali, and this company is holding a property which is rented out in Dubai. So it's acting as a holding of a property, so it's a pure holding company, but it states at the same time, it holds shares in a company in the UAE, and it holds shares in a company outside the UAE, so internationally. So from this aspect, it's a holding company of a property. And again, it holds shares in a company in the UAE, and it holds shares in an international company. Would this activity of this company, would it be considered as a relevant activity?
So going back to your question, so it is an offshore company in Jebel Ali. As I mentioned earlier, even offshore entities can be falling within the scope of the relevant entities. So as long as it is a licensee, it should be considered as a relevant entity. Regarding the activities of property holding, if you hold only property in the UAE, you should not fall within the scope of the relevant activity. Regarding the shares owned in the UAE company, again, you should not fall within the scope of the ESR. However, if you own shares in other companies internationally, you will be falling within the scope of the relevant activity.
Okay, so exactly.
So if you own shares of any equity shares, located in the UAE or outside, you should fall within the scope of the ESR.
Okay, understood. I think it's quite clear. Okay,
back
to you, Sophia.
Do you see the slides?
Yes.
Okay, so in that respect, I forgot to mention about what it is important to note is for the holding company, and I put it in green on the slide. So they are subject to a light substance requirements, which means that they only need to to comply with the filing of obligation, and also to meet the adequacy employees and premises test, basically. So holding company are not required, as per the ESR regulation only, to be managed and directed in the UAE, and have the SIGA also in the UAE. It's not required. But I want to make a comment in that respect. So it's not because the economic substance regulation says that your holding company doesn't need to be effectively managed and directed in the UAE that you should not meet this requirement, because from an international tax point of view, if, for instance, you have a company in the UAE and it is effectively and managed from France, because I'm French, obviously, from France, this company, there is a high risk that this company will be considered as a tax resident in France. So what I advise to my clients is, even if it's not required from an ESR point of view, I still recommend to have to meet this managed and directed test, and work with corporate service providers like SFM to make sure that all the board meetings are held in the UAE and are minutes, and all the minutes are kept here in the UAE. So this is my comments regarding the holding. Regarding the lease finance. So as per the UAE law, and it's exactly the same definition in all the low tax jurisdictions. So a UAE entity is considered as engaged in a lease finance business if it provides credit or rents assets, equipment, or any other good to another related or unrelated person for any kind of consideration. So, for instance, if you provide an interest-free loan, so it means that you don't get any consideration, you will not be considered as carrying out a lease finance activity. So when I say consideration, it can be any type of consideration. So if you have a convertible loan and you decide to convert the loan into equity, then even the gains realized upon this conversion will be considered as a consideration. So you will fall within the scope of the lease finance activity.
Okay, very well noted. Let me as well say something for our viewers. We have a 250 following us today. So I would like to emphasize on one point that we are discussing today, especially about this topic of economic substance, is that the requirement of this economic substance with a focus to the UAE, and this is our subject today, but this substance is widely requested in most of the jurisdictions. So it's not only a requirement to the UAE itself, so it's as well applicable in the BVI, Belize, Mauritius, and some other jurisdiction as well. Therefore, what we are discussing here applies in most jurisdictions and will be applicable in most jurisdictions as well. So there's just for them to understand and to make note of it as well to other jurisdictions that where they are having their company registered.
Yes, indeed, you're completely right. All the definition I'm giving you are exactly the same in BVI or Cayman Island or Mauritius. There is only some peculiarities, you know, for instance, the peculiarity of mainland and free trade zone, it's only applicable to UAE, obviously. But in terms of definition of, you know, what the SIGAs that I put in the slides, they are also applicable to all this low and 0% low, 0% jurisdiction.
Okay.
So yes, indeed, you're right.
Okay, perfect.
Talking then about the practical implication for distribution and service center.
Okay.
So in that respect, so regarding the distribution business, it is any entity which has an activity consisting in purchasing, buying assets from a related entity outside of the UAE and reselling those assets outside the UAE would be considered as a distribution business. And for the service center, so any company located in the UAE which providing a service to any foreign related entity will be falling within the scope of the service center. one comment in that respect. So you're not obliged to do both of this activity to fall within the scope of the distribution and service center. So if you carried out either the distribution activity or the service center activity, you will fall within the scope of this activity.
Okay, so here concretely, and from your example, we're having a company that's having a link with an international company as well outside. And we're taking in consideration that they are related. What would happen if those two companies are not related? So if we have a holding in a country A, and we have a company in the UAE that's the distribution company, and then the related co-overseas in, as you took an example, in France earlier, so let's say it is in France. So what would happen if they are not related?
So in this case, if you have, like in my example, if you have the distribution co, which buys goods from another third party, which is not part of the same group, and then sells it to another third party, which is not part of the same group, you will not fall within the scope of the distribution business.
Okay, okay, understood.
Yeah?
Okay, very well.
Now we'll talk about the banking business. So the banking business within the definition provided by the UAE law means the business of accepting deposit of money. So it's very narrowed. So usually in the UAE, the licensing, the licenses that will carry out this kind of activity will be generally licensed by the commercial bank, as a commercial bank, sorry, either to allow accepting deposits, it will be licensed either by the central bank, in mainland, or by the DIFC or the ADGM, financial authorities.
Yes.
So I know that you have a lot of foreign banks who have, for instance, branches in DIFC for to carry out exchange foreign currency or financial intermediaries activities on behalf of the other commercial banks located outside. So in that respect, if you carry out such kind of activity, will not fall within the scope of the business, banking business. However, as I mentioned again earlier, even if you don't fall within the scope of this type of activity, you need to ensure that you don't fall within the scope of another activity such as lease finance or services center activity.
Okay, so just for our viewers, just be careful to the activity that you are carrying. Your activity might be considered under one or two or three different activities. So we would need to always examine and determine whether your activity is under the scope or not under scope. You might have one of the activities not under scope, but the second one is. So and that's why we are here today, to help you to understand that you would need maybe to do the identification and to file depending on the activity that you have. Now, just regarding this matter, and especially about banking, I just received a question that I would like to share with you. Somebody is saying, I work for a DIFC entity, and we are acting as intermediaries in the sale and purchase of currencies and commodities. Are we falling within the banking activity as a relevant one?
In principle, no, because you're not falling within the definition of this banking business of accepting deposits as a commercial bank. However, as I mentioned earlier, you need to make sure that you are not carrying out another relevant activities such as services center or lease finance activities.
Okay. Okay. Very well.
Good. So now I'm going to talk about the investment fund management business. We know back when I was working in Luxembourg, you had a lot of investment funds located there, and they were managed from other jurisdictions, from BVI or Cayman Island. It was very common. So we call it like the MANCO. So in that respect, the law considered qualified as investment fund management business entities, which are making investment, divestment, and risk related decision on behalf of an investment fund. So, for instance, if you are based in the UAE or any other low tax jurisdiction, and you provide only fund administration or custodian services, you should not be considered as an investment fund management business. And also, we have seen very often where you have an investment fund with a general partner in one side and the manco in the other side. So in that case, on the type of structure, usually it's only the investment fund manager, that the manco, that will be subject to the regulation, and not the general partner.
Okay. So from that point, can an investment fund itself be considered as an investment fund management business?
If you have the case where indeed you have funds which are what we qualify it as a self-managed fund. So even if this fund basically is carrying out this fund management business activity, and it is not managed by another third party, indeed, it will fall within the scope of the investment fund management business, how they call it.
Okay, okay.
The most complicated one. This one is a...
Maybe before we go ahead to this complicated one, because I know the IP is one of the most important subjects and a lot of people will be interested by. I am just, before we move on to this activity, I have another question maybe, but this time it's related to, let me see. Okay, so that's related to lease and finance business. So it states, if my company provides an interest-free free loans, so if my company provides an interest-free loan, will it be considered carrying out a lease finance business?
So in order to be considered as carrying out a lease finance business, as I mentioned earlier, you need to have a consideration. It can be any consideration. So in the case of interest-free loan, it means that the entity will provide a loan to another entity, another related entity. It's very often. I have seen it a lot in the UAE or even in Luxembourg. If you don't receive any interest, you don't receive any income. So if you don't receive any income, you don't receive any consideration. So you don't fall within the scope.
Okay. Okay. Now we go back to the IP. So I know this is one of the most important, I would say all of them are important, but from our side, even we have a lot of clients, they do have companies holding intellectual property, patents, and so on and so on. So this subject would interest a lot. So if we can go through and understand the details and how they will be considered relevant and what they need to do in order to comply with the regulation.
Sure. So before going into the practical implication, we start with the definition. The definition are always important. So what is an IP entity? So the law says that IP entity is an entity which holds, exploits, and receives gross income from intellectual property assets. So I'm going to call it the IP, okay? So the IP, the IP is defined as any intellectual property rights in intangible assets, such as copyrights, patents, trademark, brands, and any technical know-how. So this is the definition of IP assets. Are considered also as an IP entity. So IP entity from which the licensee earns a specific income in the form of royalties, license fees, franchise fees, capital gains, and any other income from the sale or exploitation of the IP assets. So this is broadly the definition of an IP entity. So for instance, if you own just a trademark part of your business, I don't know if you are, I don't know, you're selling chocolate and you have a brand of chocolates and you keep it in your company. Obviously, if you don't receive separate income from holding this IP from leasing, I mean, franchising. Sorry, I was looking for the word. Franchising, you will not be, will not fall within the scope of the IP.
Okay.
You know, IP definition, IP entity definition.
Okay, I understand.
So even if you hold an IP, you need to make sure that you know, you don't fall within the scope of what we call the high-risk IP entity. So the laws define this high-risk legal entity. You will be considered as a high-risk legal entity if you did not create the IP assets which you hold for the purpose of your business. This is the first condition. The second condition, you acquire the IP assets either from a related entity or in consideration for funding the research and development by another located party, another person, sorry, located outside the UAE. So this is the second condition, sorry. And the third condition, you are licensing the IP to another related entity, or you generate income from the IP for activities performed by a foreign related entity. So this is what I mentioned, like this is the example that you have in the slides. So it's a kind of, most likely will be considered as a high risk IP. This is in the first case. So you have these three conditions that you need to meet. Okay. Right. And another case where you will be considered as a high risk IP entity if you do not carry out research and development or branding, marketing or distributions activities in the UAE. So if you are qualified as a high risk IP, you will need to meet additional substance requirements. You know, remember in the other slides where I was talking about, you know, the substance requirements. This one, I will put it again, you know. So you need to meet all these requirements. And on top of that, you need to add additional substance, which are the following. You need to prove that you have a high degree of control over the developing of the IP assets. You need to have adequate full-time employees with necessary qualification which are performing the activity in the UAE. You need to have a business plan showing the reason for holding the IP in the UAE. And you need to prove that all the relevant decisions are made and continues to take place in the UAE. So it's quite, that's why it's a bit tricky, and you need to meet additional substance requirements to avoid any fines in the future. So yeah, if you have any IP, I think that you should contact us as soon as possible to see to seek proper advice in that respect.
Okay, well, for our viewers, so I emphasize again that we understand the complexity of the activity itself related to the intellectual property. We understand that you would have a lot of doubts relating to it. Please don't hesitate, even after this webinar, to get in touch with us, and we will be more than happy to assist you and to give you the proper advice for you to know exactly what you need to follow as rules and what you have to do.
So after reviewing all, you know, the scope of the ESR, the ESR requirements for companies falling into the scope, just briefly, I want to touch base on the declaration and reporting obligation applicable to entities. So you need to file first a notification with the relevant regulatory authorities. So as I mentioned earlier, you know, even if you don't fall within the scope, you need to ensure that you don't have to file this notification in order to avoid fines, and you need to check free zone per free zone to see what are the obligations applicable to in terms of notification filing. So in terms of deadline, most of the, I mean, if it's not most, majority of the free zone have issued already announced the notification deadline. And as I remember, like for instance, DIFC now is the 12th of June. You have DMCC and Abu Dhabi Global Market, for instance, for the biggest one, the deadline is the end of June. So for those who have not announced a deadline, we recommend to our clients to get ready, as we expect that the filing deadline for the other authorities will be also the 30th of June.
Okay,
Regarding,
so
yeah,
sorry,
sorry.
Sophia, just to repeat here. So for our viewers and let's say our clients, prospects, everybody who's following us today, please note the date and seek advice. Certain free zones and certain authorities, they already announced the date by the beginning of June. Majority of them, it is the 30th of June of this year. So you need to take action, you need to be proactive. Please don't hesitate to contact us, because it is important to check your activity and important to send the notification on time and to not delay it. And then further on, for any other free zone that, as Sophia said, that did not announce yet a deadline, we will be more than happy to check for you and to do the follow-up with the relevant authorities and to advise you when it should be done. So for those who are viewing and they're doubting and they're asking how they could contact us, how they could get the information, we will definitely share our details at the end of this webinar, and we will give you the phone numbers and emails where you can contact us.
Thank you, Wes. Beside the notification of obligation, entities who are subject to the ESR, meaning that they are considered as a relevant entity within the meaning of the ESR, I mean, economic substance regulation, and who are carrying out a relevant activity, will have to file a report at the end of the year with a lot of details. And I just want to point out, sorry, apologize. I just want to point out that, you know, it's not because you have to file this report at the end of the year that it means that you should not work on your substance, because basically this notification and reporting filing obligation are applicable for the year, for the financial year of 2019, starting from the 1st of January, or any activity that you started in 2019. So we have seen with most of majority of our clients actually, who now they are preparing for the notification filing, and we see that they are not meeting the economic substance requirement as of now, and it's already too late, because if you don't prepare your minutes on time, your board meetings, now we have the COVID-19, your directors, they didn't come, and you did not document all these meetings, board meetings in 2019. We are in 2020, it's already too late. So what I want to say is, now you are working for the filing as of now, 2020, you are working to meet the requirements for 2020. And you need to start as soon as possible, because certainly you will get a fine for not meeting the requirement for last year. But if you get a fine for the second year, this is what I'm going to talk about now, it can hurt. It hurts.
Let's talk about something else just before, or let me point out a point before we go to the fines.
Yeah.
Once again, I would like to make a relation with non-UAE jurisdictions. Of course, we were talking about deadlines and what should be done for somebody who's having a company here registered in the UAE, and we're giving you the deadlines. So what I would like to make you understand here is that other jurisdictions, they do have their own deadlines as well. And our clients who are already in contact with us, they already know about it, whether it is registered in other jurisdictions, BVI, Belize, and so on. So this is just a reminder for you to understand that every single jurisdiction, UAE and others, they do have deadlines, and you would need always to follow that deadline. And most of these deadlines apply today, so you have to start and to be proactive into following the regulation.
Yeah, obviously you're completely right. And in that respect, we can also assist you at Mazars. I'm sure you have some of my colleagues from Mauritius. I know that they're listening to this webinar. We have other offices there, so we can work also with SFM and also our Mazars colleague located in other jurisdiction to assist you to meet the requirements, the ESR requirements in also other jurisdictions. We all work all together as a group, actually. Both from the regulatory, advisory, and also implementation point of view.
I agree with you, and I would even point out that sometimes it could be a bit difficult in some other jurisdictions, maybe to follow or meet the requirements of this new regulation. What we find interesting, and this is why we are here today with the collaboration that we have with Mazar, we're capable and we're able to provide you all the needed services, and we think that the UAE could be a very good choice and will provide the good expertise and the good and all the needed services in order to comply with this new regulation, whether your company is registered here or outside. So it's something that we can discuss with our clients in the future, whether it's registered in another country and they're not able maybe to meet the requirements over there. We can always think about redomiciling a company to a jurisdiction where a company, where the company can meet those requirements. Is that correct?
Yeah, completely correct. So we have cases where obviously it would be very difficult to have to find the qualified employees to do the work. I don't want to give a bad publicity, like for instance, to island like Seychelles or BVI. Definitely from an economic substance point of view, UAE has a strong position because it has a real activity. It's a real economy. Sorry, this is what I want to say. And definitely, if you need to find qualified people on the ground that can help to meet the substance requirements, it will be very easy for you to do it. So it's definitely from a structuring point of view, and we advise as well some of our clients, group companies, to move the entities to the UAE because it's easier for them to meet the substance requirement.
Okay.
And besides the level tax treaties as well, this is another topic.
That's correct. Now let's move on to the next point because our viewers are very, very interested about what are the fines. So some of them are asking, what will happen if I don't follow the notification which is coming in the next couple of days or couple of weeks? What would happen if I don't do the relevant filing? What's going to happen?
So here are the sanctions. I mean, those ones are applicable to the UAE only. If you need information about other low tax jurisdiction, you can contact us, and we'll check with our respective colleagues to tell you what are the specific sanctions applicable in other jurisdictions. So basically in the UAE, so the sanction, if you don't file a notification, so you have a penalty ranging from 10,000 dirhams until up to 50,000 dirhams. DIFC, we got to know that in the DIFC, the fine for not filing the notification on time is $25,000. So it's a bit higher than what the law says.
Okay.
Again, if you don't provide accurate and complete information, you have penalties ranging from 10,000 dirhams up to 50,000 dirhams, and you will be considered as failing to demonstrate economic substance in the UAE. So if you are deemed, if you are considered as failing to demonstrate this economic substance in the UAE, you will have additional other fines again. So the first year of failure, the fine are between 10,000 and 50,000 dirhams. And the second year, that's why I was saying, the first year, it's already too late. If you're not meeting the substance requirement, most likely you are going to get the fine. And it will be very difficult for you to fix the issues. Now you need to work on now for the second year. The second year, if you don't meet the substance requirement, the fines will start from 50,000 up to 300,000 dirhams. And on top of that, you have a high risk that your license will be suspended, withdrawn, or not renewed. So it's quite a high risk for your businesses. And on top of the fines, you have also exchange of information. So for this exchange of information, we start as from the first year in the case that you are not meeting the requirements. As I said, if you're not meeting the requirements, substance requirements as of now, you have a high chance that there will be exchange of information with the tax authorities located in the tax authority of the parent company, the ultimate parent company, and also the ultimate beneficial owner, as we can see it in the charts. So if you are non-compliant in the UAE and your parent company is located in France, so the French authority will be informed about that. Also the tax authority in the UK for your ultimate parent company, and also the UBO. There is the UBO, it can be like the individual.
Yes.
The little individual is missing here, but basically imagine you have a Mr. Located here in Switzerland, and the tax authority will be informed there.
So, so for our viewers who are following us, the 250 attendees, would like to emphasize and let you and please take this regulation seriously, and please don't hesitate to ask the questions, to contact us again. As you can see from the explanation Sophia gave us, it is mandatory to follow this regulation. You have fines, and you would face complications with your own tax authorities if you don't comply with this regulation. Now we have less than 10 minutes left in our webinar. Let's maybe move on to the final point that we have for them today, and to explain to them how we can help them and what we can do for them.
Yeah, sorry, I forgot to point out about, you know, the automatic exchange of information. So this exchange of information will be made automatically as soon that you carry out the high IP risk. So doesn't matter if you meet the substance requirement or not. Automatically, as soon as you carry out a high risk IP activity, there will be exchange of information with all of these jurisdictions, with all tax authorities located in this jurisdiction.
Depending on your company structure, there will be the reporting because of the activity of
just because you are carrying out a high risk IP activity.
Okay, very well.
So regarding how we can assist you in order to meet the substance requirements. So as we mentioned, we didn't start mentioning about it. So we really work closely with SFM, because the idea here is to work together from advisory point of view, and also from the implementation point of view. As at Mazars, we usually advise our clients in order to determine the classification as per the ESR, to make sure that they file the notification correctly. But as of now, from the first stage, what we usually do is to provide already an advice, because as mentioned again, I cannot stop mentioning it, is you need to meet the substance requirement. As of now, we are already mid-year, and you need to know what you have to do beside the obligation to file the notification. So we provide already an advice depending on the activity. And then after, during the year, we make a review, the economic substance review, and I advise our client to do it again upfront, not to wait until the end of the year, to end until the end of the year when you have to file the report with the relevant authority, to do a gap analysis to make sure that you meet the requirement, and see what are the action that you need to take in order to meet this requirement. And we work with, again, our partner SFM, to see what has to be done in practice in order to meet when you make this analysis based on the UAE law, basically. And of course, we are here to assist you, to update you on the evolution of the law, because now it's still new, and there will be definitely evolution and new clarification that will be provided by the UAE authority. And while waiting that, we check and we review the information which are provided by the OECD and also other jurisdictions, in order to understand what needs to be done by businesses here and also in other low tax jurisdictions, in order to meet the economic substance requirements.
Very well. Well, thank you, Sophia, for that. I would like to add as well that with building this relation that we're having with Mazars today, SFM Mazar, we will be able to help our clients, future clients, who, and prospects who will become clients in the future. We will be able to help you in offering you all the services that you would need in order to comply with this new regulation. I repeat again that you do have 3 different levels of tests that you need to comply on: the directed and managed test, the Cbi test, the adequate test. So each one of them would have, as Sophia mentioned earlier, would have a different and specific requirements, and you have to comply with each one of them. Take an example of the directed test. So SFM will be in a position providing you the resident directorship services, secretary services, and so on. For the Cbi test, we'll be able to help you in the preparation of the relevant service agreements, financial statements, and all relevant required documents. For the adequate test, we'll be more than happy to assist you in finding all your qualified employees. If your company would need to be even upgraded from a small flexi desk company structure to an office company structure, or even to move it from one free zone to another, we will be more than happy to restructure your business in order to comply with the regulation and to meet all the requirements.
Thank you, Luis. So now we have just this final slide to give a bit of summary of all what we have covered during this webinar, and basically all the steps that need to be taken by the UAE companies. It's exactly the same, except the case where the company is exempt in the UAE when it is owned by a government. But basically in other jurisdictions, you will follow the same or less steps. So basically, if you don't have a license in the UAE, you will not be subject to the ESR anyway. But it's not surprising, because if you don't have a license in the UAE, we cannot carry out any activity. So if you have a license, and you need to check if you are an exempt entity. If you are not, if you are an exempt entity, you still need to find a notification. If you are not, you need to check if you are carrying out a relevant activity. And to do so, this is where we will come and help you to do an initial assessment to determine if you are falling within the scope of the ESR, if you are carrying out this kind of relevant activity. Of course, before doing that, you need to check if you are deriving income from this relevant activity in the UAE or not. If it's not the case, then you will need to find just a notification with your relevant regulatory authority. So again, if you are a relevant entity carrying out a relevant activity, then you know that after the initial assessment, then you know that you need to meet all these economic substance requirements with the direct and managed test, the Cbi test, and also this adequacy test with the physical presence, employees, and so on. So in that respect, we will assist you along with SFM, us to review the level of substance and do what we call a gap analysis to determine, make a comparison between what it is required from a law perspective and what needs to be done. What are the changes that need to be made to meet these requirements? And this is where we will work with SFM, because SFM will help you to implement these requirements. Ois, can you tell me?
Confirm, of course.
Quickly,
Exactly. So basically, for our 250 attendees, please understand that this chart summary is applicable not only to the UAE, it is a chart summary for and a procedure to follow in most jurisdictions. So it is what you need to follow step by step and one by one in order to determine whether it's relevant or not relevant, and when to do the notification and when to do the filing. With our collaboration with Mazar, we'll be more than happy to assist you to determine that, when to file, what you need to do, all your doubts and questions. We will be helping you with that. I think we are reaching out to the end of our session. I would like to thank you very much, Sophia, for your help and for being with us today, and for doing this presentation for all our attendees. Thank you for our attendees to be with us during this time and taking the time to listen to us. And we will be more than happy to take this discussion offline. So please don't hesitate. We're leaving our contact details. For those who are asking, of course, we are going to share this presentation and the summary of the presentation with all of you. So you will have our contact details. Mazar, SFM, with our collaboration, we will be both available to help you and in order for you to keep going with your business. Thank you again, Sophia. And I would like to thank everyone. I wish you all to stay safe and have a good day, all of you.
Yeah. Thank you so much, always, for this opportunity, and thank you for all attendees for listening to this very interesting topic. And I wish you all, for those who are in the UAE and fasting, Eid Mubarak.
Thank you. Eid Mubarak to everyone. Thank you. Have a good day. Bye-bye.
Bye.